Hey guys, welcome into episode 2 of the Robinhood challenge. So to recap episode 1, essentially what we're trying to do in this challenge is grow from $5,000 all the way up to $25,000 by the end of 2020. So my strategy with this one is I'm going to be doing all types of strategies. I'm going to be trading options, buying stock, selling covered calls, selling cash covered puts, and with a couple risky YOLO plays mixed in there. So the main point of this series is just let you guys inside of my head, let you guys know my thought process and what stocks I'm buying and selling, and just how I go through my trading during the day. So let's get into the moves that I made today. So we know that before I was holding those calls on LCA and FMCI. So I took profits on those calls today, so then I had cash to make moves. If this was my regular account, I would have held those because I am super bullish on those positions and those stocks as a whole. But for this series, I do want to be trading very actively, a ton of swing trading. So I did want to sell those so we can just start off fresh and just give you guys a look inside my mindset when I'm starting a new position. I think it's more beneficial to you guys, even if I'm losing some money by selling those positions. So guys, the first move that I made today is this morning, Workhorse, ticker symbol WKHS. I was watching this one and it took a huge dip. I took this opportunity to buy 3 call options with a strike price of $15 expiring this Friday. So the reason that I went with this is because it was right at the money. I believe that Workhorse was trading at like $14.93 and I bought the $15 call. It was right close to the stock price, and that's what I like to do on these short-term options. And then I had the expiry on Friday because the price was better for this one because there's so little time premium. I got each of these calls for $50. So essentially I'm controlling 100 Workhorse shares per option for just $50. So my total cost for this option was $150, and we can see that this option ran up. I actually ended up buying it at its lows, and at the end of the day I'm up 80% on these call options, up $120. So this was a super successful trade. Now if I wasn't under the PDT rule, I probably would have sold at this 80% gain, but because I am under PDT rule, I will be holding till tomorrow. If we see another pop tomorrow, I'll take profits. If not, I will probably hold a little bit longer. I really do like Workhorse right now because they have a pretty good chance of getting the USPS deal. So what does this mean? This means that there's more volatility priced into these options. People pay a premium, and I believe I got it at a very good price. And I am bullish on this one for the shorter term as more hype builds up for this potential deal that may happen. So guys, the next move that I made is I bought 100 shares of LCA. You guys know that this is my number one position. I have the most money in this stock out of all the stocks in my portfolio. So I did want to get some holdings in this portfolio as well, just so I can capitalize on what I think should be a 2x pretty soon. And so my average cost on this position is $13.28. And the reason that I bought 100 of these shares is so I can sell a covered call. So let's talk about what a covered call is. I'm going to do a full video on the main channel of how to do this step by step. But essentially what a covered call is once you have 100 shares of a stock, you can write a call option. So somebody will buy your call option. Like I bought somebody's Workhorse call option earlier for $50, right? I'm selling somebody else my LCA call option because I own those 100 shares. I have the right to write a contract and get paid for that contract because I'm holding the shares. So the call option that I wrote is a $15 strike price expiring this Friday. So what does this mean? Say LCA closes the week at $16, which is very unlikely. That would be a huge gain. But anyways, if it closes the week up $16, I will have to sell all of my shares, all 100 of the shares at $15 because that's where the strike price is that I sold my call option at. Now the reason that I did this $15 strike price is I think it's pretty unlikely for LCA to get up there by the end of this week. I would give it like a 10% chance to do that. So I sold this call option and I got paid $15 in premium. So somebody pretty much just handed me $15 in cash because they bought this call option that I wrote for buying LCA at $15 on Friday. So personally, it's a win-win for me. If LCA did somehow get up past $15, I would still be having some huge capital gains going from my $13 cost basis all the way to $15, and then also getting that $15 in premium that they paid for the right to have the option. So it's a win-win scenario. I do plan on holding these LCA shares long-term as kind of the base of my portfolio, and I will be selling call options hopefully on a weekly/monthly basis to collect that premium, just pretty much getting my cash handed up front, and I can use that cash for whatever I want immediately as soon as I sell the call option. So one of my favorite strategies in the stock market is selling call options. Super profitable. In a way, it's kind of free money if you sell them far out of the money. So I could have sold the call option for this Friday for $17.50, which pretty much has no chance of reaching there by the end of this week. Now if I sold this, I would only get paid $8 for somebody having the right to this option, but I sold the $15 one because I got paid $15 for this option. So it wasn't that big of a difference. I'd rather have the extra $7 because personally I do not think that LCA will make it to $15 this week. Now I could see next week or the next couple weeks when they announce the merger date. But for now, I think it's pretty safe to be selling these $15 call options expiring this week, and I'll gladly take that $15 for free. Alright, so the next move that I made is I made a YOLO play. So I bought puts on the NASDAQ 100, which is ticker symbol QQQ. I bought a $276 strike price put expiring on Friday. So what's the reason that I did this and why did I go so risky? Because this is very risky. I rarely buy puts on the market because most times it is very unprofitable. So I'm looking at this and I plan to sell this immediately tomorrow. I'm betting on NASDAQ being down tomorrow. NASDAQ was up a total about 1.2% today, which is absolutely huge when the Dow was down like 0.3%. So I saw that. Now I know that NASDAQ is outperforming everything right now because it is technology. We know this, but I'm just betting on NASDAQ to have a quick dip tomorrow. If so, I'll take quick profits. And I did just want to throw a YOLO play in here with you guys. I did some technical analysis, and I did see that it was overbought. So I do think there's a pretty good chance of seeing a pullback tomorrow. And if not, I'll probably cut losses immediately. This is just a quick, risky play, pretty much gambling right here, 50-50 shot. But I'll take it because it's entertaining me and it's entertaining you guys. So the final stock that I bought today was Unity Biotech. So why did I buy this stock? So let's take a look at the stock chart. Look at this. This stock was down over 66% today, which is absolutely insane. So I bought this towards the end of the day. So what's the reason that I bought this stock if it's getting hit so hard? So let's take a look at why it got hit so hard today. So we can see that its number one drug failed the trials, leading to a bunch of disappointment in investors and leading into some mass selling. Now, it's not like this company is done for. They have other products, and this drug still has more trials coming up. So this drug is not done for. They still have the chance to come back, and I think this is very, very overblown sell-off. Now, I bought this one when it was down like 67%. It is up a little bit after hours as well. So we can see on my position in stock, I have 1.28% and up about $10 on my position of 200 shares. I bought this once again like 10 minutes before market close. Perfect time to buy it in my opinion, because I am playing the quick bounce back tomorrow, just a very quick swing trade. And then I also bought some call options on this one as well. I got a call option expiring this Friday for a strike price of $2.50. This is pretty safe in my opinion. And we can see that the break-even price for this option that I bought is just $4.20. Now this stock is actually up to $4.21 after hours, so I do think there's a pretty good chance that I get 20% plus on this option. I am just playing this as a quick swing trade, and I do think we should see a pretty big bounce in the coming days because this is just so oversold, so overblown reaction, just a major reaction. And as we know in the stock market, every reaction is an overreaction. This is definitely an overreaction sell-off, so I'll take this opportunity to buy in and ride the balance for a quick profit. So it was a pretty successful day in the portfolio. I closed the day up $387, and then I'm up a little bit after hours, I believe like $6. So not a bad day. We're on the way to 25,000. Day one of the challenge is over with. So this portfolio also, I'm in Robinhood Gold. I'm on the free trial of Robinhood Gold, and I actually am taking advantage of the margin. So I didn't know how the margin worked with Robinhood, but it did look like in my buying power today, I had over $10,000. So it looks like they doubled my money with margin. And the benefit for them letting me borrow margin is I'll pay 5% on the money that they're letting me borrow, which I believe is definitely worth it. I believe I can get so much more than 5% by investing that money. So in that case, I will take margin to my advantage. But if you're thinking about using margin, just make sure you're an experienced investor. Make sure you know what you're doing. While it is very beneficial if you use it the right way, it could also lose you a ton of money that's not even yours that you'll be in debt to pay back. So that's not a good scenario. Just make sure if you're using margin, be very careful with it and make sure you know what you're doing. So in this portfolio, I'm going to be trying to grow this slowly. I'm not going to be YOLOing the full portfolio in one position. I'll do a few smaller positions. I'm doing some super risky plays, but I do want to have some safe plays, like the LCA selling the covered call. That was my safe play today. I did a YOLO with the NASDAQ put and also made some easy bounce back plays that I believe should be pretty profitable in the coming days. So I'll be checking back in with you guys next episode. Could be tomorrow, could be the next day, but I will be sure to have this episode out within the next 2 days. And thank you guys so much for watching. Thanks for coming to the second channel. I really, really appreciate it. You guys are the OGs. Thanks, guys.